Good day, YouTube. This is Jay Money with Falling Forward Financial. Just a oil article here. I did a video on Chevron a while back, and I sold Chevron too early. I thought it was not going to go up much more. I got in the green. I had held it for a couple years and got the dividend, but just didn't do much, maybe 10-20% return. And then it went down and went back up as gas prices have went up, but should have kept it. Could have made about $20 more per share, but I didn't have all that much of it, so no big deal. But if you think it's too late to buy oil stocks, there's 5 more that still look appealing, and as you can see, this just came out 3 hours ago, so I felt it relevant to today, what's going on. So with crude oil prices zooming past 125 per barrel, most oil and gas stocks have also risen substantially. The S&P Energy Select sector is up nearly 39% so far this year. Who would have ever thought that? But unfortunately it is. Gas prices around here go up, I swear, a dime every day. So Canadian energy giant Enbridge, or ticker ENB, stock has risen about 12% so far this year. The stock's relative underperformance compared to the S&P Energy Select Index doesn't, however, indicate any fundamental issue with the company. Instead, it is indicative of the resilience of the company's cash flows toward oil price volatility. That means if oil prices fall from here, Enbridge stock won't fall as steeply as stocks of companies directly involved in exploration and production. This relative resilience allowed Enbridge to raise its quarterly dividend for 27 years in a row. In 2021, the company adjusted earnings rose 5.6 billion Canadian from 4.9 billion in 2020. What's more, Enbridge placed around 10 billion Canadian of capital projects into service in 2021, which should continue to fuel its earnings growth in the upcoming years. So I sold my Chevron. I still have some Shell and one other one, I think BP. I'm just waiting for those to hopefully go up as well, and I'm probably going to sell them. Everything's going towards EVs as well, so I got into some oil and gas stocks just for the dividend, but like I said, I haven't got the return that I wanted out of them. I could have put it in Apple and got a 200% return instead of a 20% return. Next is EPD, Enterprise Products Partners. Offers an extremely attractive yield at nearly 7.1, so I would assume all of these give a dividend. The Master Limited Partnership has increased its per unit distribution for 23 straight years. Long-term fee-based contracts for the use of its asset are behind Enterprise Products. Steadily cash flow over years. In 2021, generated distributable cash flow of $6.6 billion. So they're all still making money, but the only way they can keep making more is if gas prices go up. A lot of things are going towards EV, and especially with gas prices going up, I'm sure there's going to be a lot more people looking at EVs, electric vehicles. So next is Kinder Morgan. And again, I'm not going to read everything on here, so feel free to pause and go over what I'm not reading, or else you can find it right on MSN. Next is Kinder Morgan is a gas-focused with roughly 60% of its earnings coming from its natural gas segment. Crude oil and refined product pipelines and terminals also contribute to a significant chunk of Kinder Morgan's earnings. At 5.8%, the stock offers one of the highest yields among S&P 500 companies. So here's kind of a chart. Enbridge dividend yield in the purple, Enterprise Products in the orange. Dividend yield, the highest looks like MPLX. So kind of an interesting chart. Kinder Morgan generates cash flow from take or pay or fee-based contracts for its assets. In the last 6 years, Kinder Morgan has generated $15 billion in free cash flow and paid cash dividends of $11 billion. So that's quite a bit. Magellan Midstream Partners, sounds like something else, urology-wise, MMP, is primarily involved in the transport and storage of crude oil and refined products. Company has raised its distribution for 20 years in a row, thanks to the steady fee-based cash flows. Moreover, targets debt to EBITDA, earnings before tax, interest, tax, depreciation, and amortization ratio of less than 4 in a long run. It has managed to maintain that ratio below that level for years. Debt to EBITDA ratio indicates a company's ability to pay back its debt, and lower ratio is better, all else equal. In 2021, Magellan Midstream generated distributable cash flow of $1.1 billion, which was 1.24 times the amount it paid in distributions. Overall, the stock's yield of 8.4% as of the writing is too alluring to pass up. It is too alluring to pass up unless the stock price goes down like Chevron did for me, but like I said, I sold it a week or two ago. I made a video on it, so it's in the library. But next is MPLX. Stock has risen only 12% so far this year, so there's other stocks out there. I mean, 12% is good, but compared to like Apple and Microsoft that I have, 200%, 12 is nothing. Sorry to say. It offers an enticing yield of 8.4%, formed as Marathon Petroleum, generated $4.9 billion in cash from operating activities in 2021, up from $4.5 billion in 2020. So the cash flow covers the company's distribution payments as well. So a lot of these are still making money, but I feel this point in time with EVs and hopefully stock prices or gas prices go down eventually here, hopefully soon, but might not happen until the end of the summer. That's just my guess, speculation, but hopefully they go back down, but I feel they're all at a peak right now. A lot of things going towards EV, and like I said, everybody is probably thinking more about EVs now than ever before with the gas prices. So last I heard, and I think in California, it was $7. You can leave in the comments what your gas prices are, where you're at, and what state and city you're in. Would be interesting to know. But those are the 5 that still look kind of appealing. So again, Enbridge, ENB. Next is Enterprise Products Partners, EPD, and Kinder Morgan, KMI, and Magellan, MMP, and MPLX. So those are the 5 on the list. If you have any of those, go ahead and list it in the comments along with your cost basis, any other information you'd like to share, and that would be interesting as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.